Hey traders, welcome to Charts and Coffee. Hope everyone is having a good morning. All right, welcome. We're taking a look at Wednesday morning's action. And what we've really got here on this Wednesday morning is probably the first of a little bit of a wait and see in terms of the data coming up for the rest of the week. Now, tomorrow's GDP is not necessarily a major event. GDP used to be a major event. And the main reason we looked at GDP is it's one of the three main macroeconomic pillars. One is, employment, unemployment, non-farm, jolts, initial claims. Another is inflation. So personal consumption expenditures, PCE, the CPI, looking at different ISM, PM. I mean, it's an alphabet soup of different inflation metrics. And then we have growth, which frankly, GDP is in many ways being, I'd say, supplanted by the Atlanta Federal Reserve's GDP now. And a lot of times the GDP and the GDP now are a bit at odds. And it does seem that the GDP now numbers are being respected a little bit more. And by the way, you can grab those online. If you Google a GDP now, you'll get the number. You'll get a nice chart. That's easy enough to find. In fact, there's a lot of very cool economic data. If you want to geek out on that stuff that we get into, probably the most important would be the Fed fund futures. All right. So why do we care about GDP and why might today be a little bit of a pause day? I'm not here in any way to predict, but you can see rather than waking up to a gap up and continuation pre-market, right now the candle is slightly lower than the open, above yesterday's close, but it's a doji. Tomorrow's GDP numbers might just finally either give traction or completely take away this narrative that has basically become clickbait. All right, let's talk about the R word, recession. I say recession at this point is clickbait because let's face it, you and I know that where there's an economic slowdown, that it's just tougher from an economic standpoint, long before an economist ends up on television to tell us that we're in a recession. It's like, oh, no kidding, Sherlock, right? We're in a recession. It takes 6 months or 2 quarters to get the data to even have a recession, which is the definition for decades. And I do believe even this definition has been rewritten. The definition for decades has been 2, right? So sequential negative GDPs, right? We won't know that until we get 2 quarters of negative GDP. So anything that talks about a recession is always preemptive. And it's frankly at this point, clickbait. You want people to click, you want people to listen, you want people to read, whatever it is. You want to grab some attention, use the R word. We've had basically recessions during Powell's tenure, and he blew them off, right? He said, well, yeah, but it's really not a recession. So what's a recession? Nobody knows. GDP is probably the least important of these hot zones. On Friday, we get a biggie. There are models within the Federal Reserve, and their models need to have some sort of input on inflation, and they're based on the PCE. And that is what we get Friday morning at 8:30. If there is a major economic event, a scheduled high impact macroeconomic, I like to call those hot zones. If there is a hot zone to pay attention to this week, it's Friday's PCE. However, now that recession narrative, like a merry-go-round that just won't shut off, is back turned on, GDP is probably going to get a little bit more attention, and it's the final GDP. Yes, Rog, how many GDPs are there? Too many. There's a preliminary, right? There's the final. And so now we're going to get that final. Keep an eye on, reaction tomorrow at 8:30, but largely whether the Federal Reserve is going to cut or not. That's the big story. Whether or not they're going to cut is going to be far more based on that personal consumption expenditures, PCE number on Friday. That's where we are right now, gang. I think from a chart perspective, You take a look at some of the volume that was important to get through at 58.20. We found our way above that. The next volume ledge to keep an eye on is at approximately 58.60. So these are volume-based support and resistance. If you're a fan of an anchored VWAP, for sure, put something like that on the chart. Pretty easy to do with something like, and I'm on TradingView right now, pretty easy to do with something like TradingView. That would be the anchored VWAP for this year. All right, so definitely keep an eye on that in terms of what we're going to be looking at going forward. Ultimately, just remember this one thing. As long as the Federal Reserve is on track to cut rates, and gang, yes, regardless of what is being said, what's in the data is pretty simple to see. And Friday could change this dramatically. It could either clarify and push this expectation closer and higher, or it could push it out further away. And right now, it looks like it's a coin toss between June 18 and the July 30 meeting. And that just means that we're going to get a rate cut. We just don't know when this little short-term pause between cuts is going to last. We don't know. We know there's a pause. That's been pretty well, discussed. And now we're asking ourselves, when do the rate cuts come back? If the PCE is cooler, aka lower, then we're going to see likely June and a little bit more focus. If it's higher, hotter, it'll get pushed out to July, heck, maybe even September. But right now, as it stands, it is highly anticipated that the first cut could be as close as June 18, likely July 30, and that's what we're going to operate with. We'll see what this looks like, say, at the open on Friday. That's where we are right now in terms of price action and those events that could change people's opinions about what's going to happen next. Remember, gang, our job has never been, as traders, you and me, we don't have to predict anything. Gosh, who can do that at scale over the course of years, if not decades? Nobody. But our job is to look at the data, trade what we see, not what we think, look at our levels, look at our lines and say, hey, does this present an opportunity to me or not? And the hardest thing is to say, there's nothing to do. Sometimes there's really nothing to do. And one of the things that we're doing in the Sector Secrets Mastery right now is that we know that there are downtrends on the daily across a number of sectors and high concentration weighted stocks, those stocks that are heavily weighted in the NASDAQ, S&P, Dow, etc. We know that the weekly time frame of a number of charts are actually setting up beautiful longer term position trades, meaning if you have a timeline, one of the things that I like to do is if I've got a timeline of, say, 6 months to years, if not decades, right? So 6 months to year plus, that weekly time frame is particularly well equipped to help us set those trades up. So if I have the ability to look at a weekly and I've got the capital to allocate to a longer term, I hate to say buy and hold because I don't actually believe in buy and hold. But if I've got the capital to do that, then I'll put capital to work. We've done so this year in Coke, Altria, Walmart. And it's not about the next 6 days or 6 weeks. It's about the next 6 months to 12 months to 18 months to 24 months. All right. The next thing is day trading. A couple of things that we've been making tweaks with is keeping an eye on initial balance zones, the first 60 minutes after the bell, as opposed to clearing range zones in terms of whether or not we're going to have follow through for that session. And then the last thing is adjusting to a much more nimble swing trading time frame. And for me, that's the 1 hour. So where the daily time frame still might be pretty heavy and in a downtrend, I'm not going to try to pick a bottom, right? That's a low percentage way to live. What I'll do instead is say, hey, look, do I have trends on the 1 hour time frame that would give me a swing trade? Let's say, we're looking at, Amazon, right? This was one that caught my eye. If I'm looking at Amazon right now and I'm looking at where the trend is, it's up. So the trend on Amazon on the daily is really heavy, right? It's been moving lower, lower, lower. I'm not going to try to guess at where the low is. Rather, I'd like to see a time frame. In this case, I have either 1 hour short-term swing setups, or I have daily time frame, long-term. So I'm not hunting around for a time frame that I like. I'm not jumping from the 2 hour to 4 hour to 30 minute. I'm not doing anything like that. Two fixed time frames. They have their job. And right now, it might be the hourly that could be a whole lot better. So that's in a quick 10 minutes. That's where the plan is in the Sector Secrets Mastery. And if you're lacking a plan, if you're thinking, Rog, that's super interesting, but I don't currently have a plan for what's happening, come check out what we're doing in the Mastery. And you'll see what we're doing as day traders, as swing traders, and yes, even right now, which is a fantastic opportunity as position traders. How do we put those longer term positions on as well? All right, so let's get into it. I see a couple questions have popped up. Good morning. Good morning. All right. Let's see. Okay, Jawan, good morning. Thanks for the insight into the markets. What are your thoughts on Intel and Palantir for buying shares? Oh, buying shares for swing trades. So, Jawan, I don't typically swing trade with shares, but I will say this. I was talking about the position trades earlier. So some of our traders, even though I'm buying shares of Coke, Altria, Walmart, when we had those setups, Coke and Altria were in January, so you could see what's happened in the interim. And Walmart was just the other day. I'll buy shares because I don't want to be owning a depreciating asset where I've got a fixed amount of time for that trade to appreciate. One of the advantages of shares are they're mine. They're not going to expire. They could split. There's a lot of advantages to the shares, but the capital outlay can be significant. And sometimes you're just going to get a better bang for your buck occasionally with options or leaps, whatever it may be. So that's the first thing in terms of when I use shares versus when I use options. However, the cool thing is when I send out an alert, when I have a trigger for entry, it could work for the shares. That could be the same trigger to buy the shares, or it could work for the underlying option that you're interested in. I'm going to always prefer an at or slightly in the money strike. So same trigger, same analysis. Choose your own adventure. Who here remembers those books? I used to love those books. And so it's a choose your own adventure choice. All right. So Intel, in terms of the daily time frame, I don't love it, but it's probably one of the stronger names relative to other stocks in the groups that it belongs to. And it's sitting really nicely at a volume ledge right now. One of the things that I do when I'm traveling, and I'm going to undo this just for the sake of clarity, is I'll put a number of short and longer term indicators on one chart. So when I'm on an iPad or I'm on a laptop, I can look at everything. So this is what my daily chart would look like. My multi-structure, the visible range volume profile, and the daily price movement ranges, which are the kind of gold color and the gray color zones. I'm going to wait for price to enter the gray zone, Juwan, and I won't do anything before that. It's interesting that we're at a interesting volume ledge, right? You can see that's actually the point of control. That's or one of, no, the point of control is down here for the year. But look at this volume ledge right there at about 24 and a quarter. That means there's a lot of attention concentrated right there at that price level. So price-based volume is interesting, but I won't do anything until we get down to about 2360 in that area. On PLTR, and notice, by the way, notice that all my indicators, all my zones, all my lines, all my levels are completely automated. I'm not drawing anything manually on my charts. And at this stage in trading technology in 2025, there is very little reason to have a subjective manual-based process, because here's two reasons. One, when it's automated, like you see here, I've taken all the things that I've learned, all the things that I've tested and done for 30 plus years, and I've said, well, if it's truly a process, keep this in mind. If I truly have a process, not feel and, oh, we'll change the settings and we'll update this. If I truly have a fixed process, I can program it. And that's where I think most of us should have this litmus test of, is my process programmable? Is that a word, programmable? And if it is, then I truly have something that's repeatable and testable. If I don't, I'm kind of freestyling it. It's the X Games, kind of making it up as I go along, and there's no way to test that. On Palantir, interesting volume ledge. On Palantir, I probably would put this one on the back burner on the daily time frame. On the weekly time frame, since you asked about shares, Palantir's uptrend on the weekly is gorgeous. And if we can pull back to a mean reversion, something similar to the week of March the 10th, yeah, that would be great. That would be valid. That's where I want to be in. Not up here at 95, closer to 75. And you can see that happened pretty close to it on the low of the weekly candle of the March 10 weekly candle. All right. What about natural gas? Hey there, Ren. So if I'm looking at natty gas, I'm going to start off with natural gas futures, and then I'll take a look at an ETF for natty. UNG, as you mentioned, is a really, really good one for that. If I'm going to look at natty gas, a couple interesting things. A, good eye. Natty's in an uptrend. Love that natty's in an uptrend. It's above the white dots. It's in now the bullish hemisphere. I look at those white dots and I think, that's my equator. That's what separates the bearish sentiment, the bearish hemisphere, from the bullish sentiment or the bullish hemisphere. And I like that we're above those dots. And that's pretty darn important to me. After that, it's a matter of waiting for one of two things. I'm likely not going to wait for a mean reversion, although the mean reversion, and it's a weekly chart. Let me go to the daily. Actually, the weekly is kind of interesting. The weekly could be interesting for a buy if you're willing to buy further dated out UNG calls, if you're looking for this commodity to really climb. If not, I'll tell you what, probably not till about 3.72. And at that point, when natty gas futures, Ren, when they reach that level, then I will think about UNG. I'm actually not looking at UNG for the setup. Remember, UNG is an ETF comprised of usually a little bit of cash, usually one or two different contracts. I'd have to take a look at the current ETF makeup, but most ETFs that are using a futures contract, oftentimes, they don't always hold natty. Some ETFs will hold the physical product. Most of them are going to hold a near date and a slightly further dated out futures contract. So that's an easy thing to go look at what the composition is of the ETF at the moment. And then after that, I'll look at the futures contract and then I'll trade the ETF alternative. Now, those of you that have been watching this show and my content for any period of time, you know I'll say the same thing about if you want to trade the NASDAQ. You want to trade the QQQ? Great. Watch the NQ futures. You want to trade the SPY? Awesome. Watch the ES futures. Heck, if you want to trade the SPX, watch the ES futures. And that's the difference between something, the futures, that have been going on for about 23 hours versus something that's got this tiny little 9:30 to 4 o'clock trading window. And that's the way I would break that down. As far as AITD, I would leave it alone for now on the daily. If you're willing to go a little bit longer term and you're interested in perhaps owning shares or a longer dated option, I'd keep an eye on about 2030 for an oversold support level. We bounced off that level 3 times. I mean, you could probably call that a pretty decent support level right there around 20 and a quarter, 2030, right? So that would be something if you're looking longer term. Shorter term, daily, I'd probably leave it alone. 1 hour could be interesting if we get down to about 23.15. That area could be interesting for support, but with a very near term 1 hour view. And I would likely, usually, my 1 hour setups are maybe 1 to 3 days. 1 to 3 days. All right, gang. As always, thank you so much for being here for Charts and Coffee. I'm here every morning from 9 to 9:20. Time for me to jump into that Sector Secrets Mastery room. Thanks as always for the time. Be good to each other. I'll see you tomorrow.